Hello traders, my name is Grega Horat and welcome to a new video analysis in which we will take a look on the Aussie dollar, Swiss franc, oil and gold. On the Aussie dollar weekly chart we are tracking a counter trend corrective movement from 2011 highs. We think that market is now in wave C, which is still incomplete, but the really interesting thing is that here we had a triangle placed in wave B. Okay, so we know that triangles are corrective patterns and they can occur only in wave B position, okay, in wave X position or in wave 4, but in each case the move that will occur after a triangle will be final within the larger wave structure. Okay, so the larger wave structure is pointing here to the downside, okay, because this was a first leg within a free wave decline. So I think this is a larger final leg within this larger free wave of a pullback. Okay, so we know that a triangle cannot occur in wave 2, so I think that this is a counter trend movement, a corrective price action that is part of a larger uptrend. However, that's a weekly chart. Before we may even consider to turn bullish, we of course need to be able to count a completed wave C. Well, wave C is a 5-wave movement, it's an impulsive leg, so we are tracking this structure on a daily chart here, and as I said, we need 5 waves down. Now here is our wave 1, wave 2 pullback, an extended wave 3, and now it looks like that this wave 3 could finish very soon. Okay, the reason is because this price action in the last few days is very slow, very choppy. The bearish momentum here is decreasing, which is clearly evident on this RSI reading. So in fact I'm tracking here potential ending diagonal placed in wave 5, so I am prepared for a reversal higher. Okay, however, trend is still bearish. We may see a continuation lower from current levels, but with this wave structure I don't think that there is any good short opportunity at current levels. In fact, I think that we'll see a deeper corrective retracement here in blue wave 4, maybe later in July, and then this will be new short opportunity after a free wave bounce to catch wave 5 down. So for now the trend on Aussie dollar remains to the downside, but I expect a corrective rally in coming days. Okay, now let's take a look also on Swiss franc. On dollar Swiss, actually we will take a look on the monthly chart. I labeled here as a completed 5-wave decline from 2000 highs. We know that after every 5-wave movement correction will follow, so I think that this correction is now underway. Corrections are 3-wave patterns. This is only first leg down, the first leg up of only 3-wave movement. This is a sideways price action, is slow, a choppy movement in range, in the ranged market. So I think this is a contracting triangle placed in wave B. Actually it's a running triangle, because notice that here wave B moved above the start point of wave A. Okay, but still this movement is sideways, so I think it's part of a temporary uptrend from here. So be aware of a push higher into wave C. Of course this wave C will be confirmed only when we will see a break above this falling resistance line of the triangle. Okay, so here's the closer look. Ideally we will see a push higher here, a daily close, a decisive break of this trend line will of course confirm higher prices for wave C. On the 4-hour chart we can already see here a broken trend line. Just let me draw it a little bit better. We can already see here a broken trend line and some evidences of an impulsive structure, so I think that this market is headed higher and that we have a tradable low in place here. In the near future we could see a corrective retracement because of 5 subwaves within a black wave 3. Ideally this corrective retracement will reverse back towards this trend line, upper trend line of this base channel. What is the base channel? The base channel is channel where you connect lows, or I should say start of a wave 1 and low of a wave 2, and put a parallel line on the top of this wave 1. Okay, and if you see prices trading well below, well above this upper trend line of this base channel, then this means that bullish momentum is strong, and this is typically in wave 3 of a 5-wave rally. So I think that this movement, especially from last week, is important evidence that market is in wave 3. Okay, and this means that coming pullback should be a wave 4, part of an uptrend. So ideally, in such case, wave 4 will find a support around this base channel. Okay, and now let's take a look. Also, we set oil. On crude oil weekly chart, we are tracking a huge triangle, still incomplete, placed in wave B. This was wave A, B, C, and it looks like we are trading higher now in wave D. If that's the case, then we know that wave D must not move above this wave B swing high, otherwise the wave count will be invalidated. So I expect reversal, let's say maybe from 105 level in coming days, maybe weeks, for a push lower, for a pullback into wave E, final leg of this triangle. Of course, as I said, my wave count would be invalidated if we see a break of this 110 level. In such case, I would be looking for this wave count, not this one, just a second, for this wave count, okay, which suggests that this wave B triangle has already finished here. Okay, and that we are now in early stages of this wave C, which should be subdivided in 5 waves. But as I said, as long as the market is trading below this level, I expect to see our 3 waves of a pullback in wave B. Now on the 4-hour chart, actually we need to take a look on the daily chart. On a daily chart, I label this as a contracting triangle placed in wave B, and now we are moving higher in impulsive red wave C, which is a third leg of wave D. Keep in mind that each leg within a triangle should unfold correctively. Okay, so I think this is a temporary corrective recovery in wave D, and that we will see a reversal lower. However, we will see a reversal lower, or we will look for a reversal lower only when we will be able to count a completed 5-wave rally in wave C. For now, that's still not the case, and on the 4-hour chart I can see some nice impulsive price action, which should lead to further gains on crude oil. I can see here wave 1, wave 2 pullback, break out of the base channel here, which caused a nice acceleration higher. Okay, so this is confirmation that we are trading impulsively. So this was a wave 4 pullback, this was a wave 5. So ideally the market is now moving lower or sideways in this corrective wave 4, because we know that after every 5 waves, correction will follow. Ideally this wave 4 will retrace back to the region of a previous wave 4, which comes in here around $100 per barrel or $1 above. But important is also again this base channel, which if tested will react as a support in this wave 4, and then could be a new nice opportunity to catch a wave 5 higher. Okay, so I'm bullish on oil, but be aware of a deeper corrective retracement in the near term. I'm sure that we will also have a divergence here on the RSI. Yes, I can already see it. This is a very common between wave 3 and wave 5, and suggests that this market will find resistance in the near future and cause a deeper pullback. Okay, so keep a very close eye on this wave 4. Now let's take a look also on gold. On gold daily chart, we are tracking larger decline, impulsive decline in wave C, which is still incomplete. We are in fifth wave of this wave C, wave 5 counted from here. Now this wave 5 also need to be subdivided by 5 legs. This was wave 1, wave 2, then move through the lower support line of this base channel, which means this was a wave 4, wave 3. Now notice that this wave 3 also found a support at 161.8% extension of wave 1 measured from a wave 2 high. This is a very important Fibonacci level from where we expected a bounce, and we got it. But it's still, it seems that this bounce is incomplete because we are tracking wave 4, and wave 4 is corrective lag, and the minimum structure for corrections are 3 waves. Okay, so if we take a look now on the 4-hour chart, I can see here nice impulsive rally from the lows. So I think this represents first leg of these 3 legs up, and now notice that this was clearly a 3 waves of a pullback from the top. So I think it's a wave B, and that we will see now push higher in this week into wave C towards 1 to 70, where is the 38.2% retracement area. That's measured of this wave 3. Okay, this is a typical target for fourth waves, but ideally we will see a little bit higher extensions towards 1300 level, where is the swing high of previous fourth wave. Okay, so watch for higher prices on gold, and this wave C will actually be confirmed once the market, if the market will break higher, break above this falling trend line. Okay, so break and the daily close above this daily close price, of course, because that's the most important price of the day. Daily close price above this trend line should put bullish price action in play for a wave C, for higher levels in wave C. Once the market will reach these levels, then again be aware for a potential sell-off, and impulsive decline from here will then suggest that we are going lower in fifth wave. Okay, but for now let's focus on a one wave at a time, which means push higher into a third leg of recovery from here. Okay traders, that's it for now, and I will catch you with further updates on our intraday updates page. Have a good day.